Okay. So in this live video, I'm just going to maybe go through some kind of process, which Peter you already know, but Destiny, I don't think you already know this because you are just in a newbie level. So I'm just going to teach about candlestick, what's candlestick and how all those candlestick move, how they move. So Destiny, you have to listen, like you have to really listen to this because it will help you a whole lot. Because this is the key to trading. If you don't understand this, like you're literally going to be making a whole lot of losses every single time you take trades. So you have to listen to this. Peter, same with you. So you have to listen to this because it's going to help you a whole lot in trading. So I hope you guys can see my screen.
Yes,
All right. So um let me just go through this process. First, you guys already know trading view, right? You
yes,
already know trading view. Peter, you know trading view, right?
yes.
So I'm just going to teach you maybe this is going to be a candlestick, but with this candlestick, like I'm not just going to teach you about with the indicator. This is an indicator, but I'm not teaching an indicator. I'm just going to just use it as an example. I'm going to use it as an example. So this candlestick you are seeing right here, this big candlestick you are seeing right here, this 1 day candlestick, this is a full 1 day candlestick. You can just see it right here. This is 1 day candlestick, which is this candlestick. So this indicator that bring this candlestick out. If I off this indicator now, you are going to see that this was the candlestick that was here. So you are going to see the wick, the low wick, the high wick, and then the full body. So if you on the indicator, it's going to bring it out here. This is the full wick. So just give me a few minutes. I think I have to edit something. Hmm, I have to put something in white. Right. So you can see this right now, right? Can you guys see this?
Yes, I
Yeah.
can see it.
So you can see where the market opened from. Market open from here, then push all the way up to this level, which is this big candlestick right here. Because this is the daily candlestick. This is a full day candlestick, but the market was bearish. Market was bearish that day. So you can see how the market pushed all the way to this level and then pull all the way back down, ending with bearish candlestick. So you can see how the market literally just move. It will open, create a wick, and then start pulling down. So if you wanted to join this trade, this was a daily candlestick. So let's go over to 1 hour. So you are going to see where a 1 hour start from in a daily candlestick. Let's just give me a few minutes. Okay, we are still in a daily candlestick. So let's say we mark this. Let's mark this daily out where it open from. Okay, this candlestick, this candlestick here, it opened right here and then push all the way up before pulling down. So after knowing this, you already know how many candlesticks are in a day in 1 hour. How many candlesticks are in a day? Like Peter, you already know this now. Like in full day. and you are in 1 hour, how many candlestick will you count? Like how many will you count? Is it 24 hours? The which is 24 hours. I think forest is 24 hours. Yeah, maybe 22 hours, something 24 hours. So you are going to just
Three
count
hours.
the from a 24 hours. So it's just quite simple. You can see this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, which is 10 hours in a daily candlestick, which is this is forex currency pair. If it was derivative indices, this is derivative indices. So let me just bring out this daily separation and go over to maybe 1 day, 1 hour. So you are going to be seeing 12 hours, 12 candlestick in a daily candlestick, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. And this one that is start from here, that's 24, which is 24 hours. But in forex pair, it's not going to show that way. Like it's going to show 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Because around 10 in the evening, the market have already closed. We will not get to 12 hours before the market, maybe around 12 in the night. But deriving this is always work, maybe like every single time, like it will not stop. But forex will close, market will close around 10 in the evening. So you already know all this. So what you put in your mind now, what will this market do today? It is very simple. You can see that this is a daily candlestick. This is a full day candlestick. So it open from here, give us a week, then pull all the way down to this level, giving us this week, and then pull all the way back, close here. So this is the week that just starts today. This is the week, the place that the market closed from. This is the open, this is the close, and this is the higher, lower place the market gets to before creating a wick. This is the highest the market gets to before it creates those wick. So that's what you are going to be seeing in every candlestick. So before this, you can see this pin bar. Peter, you already know about pin bar. You can see this pin bar, then the market push all the way down, then create the same thing that happens here in 1 hour. The market give us a week and then start pulling back down. The market they give us a week right here. You just keep pushing down, but then the market give us a week and then start pushing down. So what you just need to understand about candlestick, because it will help you a whole lot. It will help you a whole lot. First, if you understand ICT, you are going to maybe after understanding candlestick, then you understand ICT, then use it as a trade entry. You will now know where to enter the market and where not to enter the market. You can see maybe 3 days ago, or yeah, 3 days ago, I guess. Let's put that daily separation because it's still on trading view as just let me put it here. If you understand this thing I'm trying to tell you, like if you understand what I'm trying to teach here, trust me, trading will be very, very easy for you. It will be very, very easy. Trading will be very, very easy for you because this is the key. This is the key. If you don't understand this, trust me, you are going to be losing a whole lot of money. You are going to be losing a whole lot of money because this is what will give you head in the market. Now, okay, the market opens here. I'm coming. Let me put this here. Okay, the market opens right here, this level. Market opens from there, which is the day. So it pulled back down. Sorry, I was thinking that the market start from here. So let's just count the candlestick here. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. I know it will not get to 24 because the market usually close around 10 in the evening. So yes, day before yesterday, let's say we were trading which is on Wednesday. Let's say on Wednesday, the market broke structure to the downside. The market broke structure to the downside. And for me, I like trading liquidities. For me, I like trading liquidity. After understanding candlestick, you understand liquidity. You understand liquidity, then understand structures. What are structures? You are going to see maybe the market is pulling back down, or maybe the market is still pushing up. You're going to be seeing higher highs, higher low, higher highs. But in this case, this was a change of character. This was not a break of market structure. This was a change of character. Because why? The market was pushing up, creating higher highs. You can see this higher high, higher low, higher high, higher low, higher, creates another higher high right here, creates higher low, higher high, higher low, higher high, higher low, take it out this liquidity, then create another higher high, then creates, it now breaks the structure to the downside. First, it broke the structure to the downside, but it was a weak, that was a liquidity. That was a liquidity for me. But then again, I'm not teaching about liquidity stuff. I'm teaching about candlestick. But I'm just teaching you guys how you can use it, and as an example for you to just take the trade after seeing what where the market is going, then you will use it to take the trade. Because let's say today will be bearish. You already know that today will be bearish, or yesterday, well, let's say on Tuesday was bullish. Let's go to a daily time frame so that you can see what I'm saying. On Tuesday was bearish. On Tuesday was bearish. On Friday was bearish. So first, for me to know that on Friday will be bearish is for me to see that on Tuesday was bearish. You can see this low, right? This bullish candlestick, which is this white candlestick right here. It was bullish. That was on Tuesday. It was bullish. But then again, the other day it took out this high. If you take a trade, maybe like let's say in lower time frame, like 1 hour, because I love trading with 1 hour because it gives me more edge in the market. Let's say on Tuesday, on Thursday was a little more bearish because the market opened right here and then it closed right here, so it was bearish. And then on Wednesday, the market was bullish because the market closed around here and it opened from here and then closed around this level. So for you to know that, okay, the market will be bearish, you have to see a structural break of Tuesday. You have to see a structural break for on Monday, which is on Monday. You can see this on Monday right here. For Monday to work, maybe like you want to trade on Monday, you will have to see a candlestick of Tuesday, maybe breaking above this week, which is, I think this was the low of that day of on Monday. This was the low. The highest point was this level. So you should have just maybe like you want this low to go, which is this week low to go. But then again, it didn't give us that change of character. It just created a little week, and that week it didn't even break this week right here. It didn't even break it to the downside. So then again, I think I have a setup here, but I didn't take the trade because it didn't give me confirmation before pushing all the way up to this level. So I miss every single trade. that day because I was just waiting for my setup, but it didn't come out. So I hope you guys are understanding me or I'm too fast.
So,
Am I too fast?
no, no, no,
Is Peter Ciaran?
Peter.
Yeah.
I don't think maybe
Okay, that's fine. Um, since you are the only one online, so I can just maybe grab through. So you have to understand all this process. Maybe yesterday was bullish. You have to know that okay, the next day will be bullish. But for you to know that okay, that day will not be bullish, it has to break structure to the downside before you will now understand that okay, that day will be bearish. You have to understand one single step. Like you can see today, let's say on Thursday, which is last week, was bullish. On Friday was bullish, and on Monday was bullish. On Tuesday, what was a little bearish, but then again, the market didn't just take out those bearish and then it pushed all the way up. The next day, which is on Thursday, was bearish. So on Friday, you should be expecting bearish too. That was what happened here. You are going to be seeing every single day. Every single day. You can see this on Monday was bullish, on Tuesday was bullish, Wednesday was bullish, and on Thursday it didn't break with body but with weak. So after seeing that, you will now know that okay, the next day will be bearish. So how will you trade it? That's the main question you are going to be asking yourself. Since the market was the Monday was bullish, Tuesday was bullish. So if you want to check, just check it under this place. You are going to be seeing Monday, Tuesday. So you can see on Friday was bearish, but on Monday was bullish. Tuesday was bullish. On Wednesday was also bullish. So on Tuesday was bullish, but later end with bearish, and then it closed with a wick. It didn't close with body. You can see this one closed with a body, the other one closed with a body. So, but now this one closed with wick. So that means you are going to be having a reversal. So going back to maybe a 1 hour, you are going to see a change of character to the downside for you to take an entry, for you to see maybe opportunity to the downside. So I think this was the week. Hmm. Sorry, let me go back to that day so I can draw the week where. All right. So let's go over back. So 1 hour, this is 1 hour. I think the candle was a little bit small. So we are going to be going back to 15 minutes to find this zone. So let's go back to 15 minutes or 30 minutes. 15 minutes is more better. It will make
no.
the chart more presentful. So it's going to be very simple understanding candlestick because that will give you more edge, more understanding of what you are doing in the market. It will give you more edge and more understanding in the market. So after saying this, you now see that that day was in a daily time frame. You see that the market was give you a week. This was a week. This was a week, and then it now give you a structural break to the downside. Then just grab the liquidity at this level. Grab this liquidity at this level. You have another order block here. When the market didn't trigger it, it just triggered this order block right here and then start consolidating But if your stop loss was just below this level, you will have taken a loss. But just understand what you are doing. Then the next day was on, which is on Friday, was bearish. That's when you will be taking trade, and you will have take trade from here, from this level, and then your stop loss will just be right there. Your entry will have be right here, and your take profit would have just been at this low, which is low of that day. Or maybe you want to target more, you can target 5 hour, which most time I go for. So that's it's just so simple for you to understand candlestick, because in 1 hour it's going to give you 20, 24, 23 hour, 23, which is 23, 22, which is daily
Mm.
one hour. So in 2 hours it's going to give you, you will divide it by two, which is 11, 12, or yes, let's say 11 or 12. Yeah, 12, which is 24 hours, 11, um which is 22 hours. So which is in 2 hours. So on 4 hour time frame, I think it's six. So you are going to see six candlestick. One, two, three, four, five, six. So that's just how it is. So you have to understand the direction of the market. You have to understand the direction of the market. You can see this. Um, if you go to a daily time frame, you are going to see everything clearly. Everything clearly. Like, you are going to know where the market is going and what you are doing. Everything is going to make sense because you know what you are doing in the market. So what I explained here was that, okay, this bullish candlestick this one closed with a wick, and then the next day close that week, close with a body, another day again close with a body, and the next day didn't close with a body but close with a wick, and then the wick leads to a break of market structure to the downside, and then you have another setup right here, the market pull all the way down. So let's say this zone right here, the market was pushing all the way up, giving us three candlestick, and then the next day the market end with wick.
Mm.
So what will you expect the next day to do? Next day we have pushed all the way down, taking out this low. But then again,
Yeah.
it didn't give us any of that. It just it push up with bullish market, and then the next day, and it didn't close with body. So that would have given you a confirmation that, okay, that day didn't close with body to the downside, or the other day didn't close with body to the downside. So maybe you will have avoid on Wednesday, but
Mm.
on Tuesday, end with a week to the upside, a week to the downside, and then it was bearish. So that will now give you a confirmation that the next day, which is on Friday, will be bearish. Because why? On Thursday is already bearish. So on Friday should be bearish too. So that is just how it all works. That's how to know a daily bias. That is how to know your daily bias. So if you see consolidation day like this, you just have to let the market be. Just leave the market. You can go to another currency pair to trade. So it's not just in gold. I'm not even teaching you gold, because why? I don't want you guys to even go that side. No, you go that side at all, because gold is more volatile than just USD. So everything I'm teaching right here work in all pairs. You work in synthetic. I even see it more effectively in synthetic, because it just is so perfectly working in synthetic. In forex market, most time news will just take charge. Like, it will just give you many stop loss with news. So you have to avoid news while trading them in forex currency pair. But in synthetic, like, it work perfectly in synthetic. it work perfectly in synthetic. Let's take this thing out, and then we are going to put it back, but then we are going to go to 24 hours, which is a day. 24 hours is a day. So you can see this level right here. So this yesterday, let's say on 24th, which is day before yesterday, was now I will be closing this meeting very soon. So let's say on the 24th, on the 4th, which is day before yesterday, was bullish. And we already know that the next day will be bullish because why? It closed with body. You can see that it closed with a body. So you can avoid this day that didn't close with a body. We're just closing with week. But now on the 4th, which is day before yesterday, close with a body, which is a break of market, a structural break to the upside. After seeing this, you will know that okay, the next day is going to be bullish. So what you are going to do is just to go to that next day, or maybe let's say 1 hour, then find a zone to take the trade from. It's very, very easy. Just find a zone to take the trade from. Since you already see that the market will break structure to the upside, and you have a breaker block right here. So that would have been your entry if you wanted to take this trade. This breaker block would have been your entry. You would have just entered from this breaker block, and then your stop loss would just be below the breaker block, which is this low right here. And then your take profit will have been maybe 3 hours. We have hit the next day, which will have hit the next day. And then that's just it. You will have just see confirmation, or maybe like you want to trade on Friday. On Friday was also bullish. If you go back to a daily time frame, you are going to see that, which is this day was bullish. So you are going to just look for maybe a zone, which is maybe a resistance zone, an order block. You can see that this was an order block. That day open, it push all the way back or all the way up, then pull back down again, then pull back to this order block right here before pulling up. So you are just going to take trade from that order block. Your stop loss just above, or maybe 3 hour. 3 hour. I love 3 hour, 5 hour, but um if I take maybe 5 hour, it's more better than just 3 hour, because then if I lost three trades in 5 hour, if I lost, or maybe I make three trade, I took three losses after taking a 5 hour. That means I'm still profitable with two. So that's why I love taking 5 hour. I'll just go for 5 hour, which is the next day, or let's say the next day, yeah. The next day, the opening of that next day, it got hit. So this is just how it works. After understanding the bias, don't trade in a consolidation. You are a newbie, you are starting out now. So don't trade in a consolidation period, like just like this zone right here. Let's say um just like this day. Don't trade in consolidation day that you don't understand the market. If you don't understand the market, let's say let's go over to a daily time frame, and then let's take this line out, and then like this zone. If you don't understand that trade, like you don't understand what the market is really doing in that day, just go over to another pair. It's much more better than you just taking trade, unnecessary trade, and then taking losses. You can see this. The market was just pushing all the way up. You will have been taking maybe buy on the 26th, buy the next day, buy the next day, then take another buy. But then again, the market pushed back the next day. You will have seen this, because why this one created a week. You will have taken the next day, which is on the first, you will have taken the trade. But these 2 days, we are giving you maybe two loss. Then on uh, the next day, we have given you maybe profit, but you won't have taken this trade after taking two losses. You will have wait for the next day, and then that one give you a break of structure. The next day will have given you 5 hour. That's just how it is. You have to understand what you are doing in the market. Then look at this. Like this day, you don't need to trade it. Like this day you are seeing right here, which is almost 4 days. You don't you that's why I love it when you don't pick just one currency pair. Don't just pick one currency pair. Okay, today that day was bullish, and the other day was bullish, the other day was bullish, the other that was fine, but it didn't break with body. That will have given you a confirmation to sell, which you will have take loss the next day. And then you will see that this one end with body. Okay, this one end with body. You will have taken one setup on this day, then you will have make profits, which you will have found an order block at this zone. If you go to a lower time frame like 15 minutes, 30 minutes, 1 hour. I like taking mine from 1 hour. So you have to understand what you are doing. You don't just blindly take trades that you know that okay, this will not make me profit, and then you still take the trade. That's not how to trade forex market. And for me, I would have taken those consolidation after seeing that okay, fine, this was a structure. After understanding structure, this was a break of market structure. Then I would just look for a liquidity spot to take the trade. So that would have been just my entry. So after seeing let's say this break of structure to the upside, because that was its trade that maybe it closed with a body. After closing with body, then for me, I will be looking for a liquidity spot to take any trade. So for me, this was a liquidity spot for me. And here you go to for 2 hours, you are going to see a fair value gap, a good fair value gap right here. You have take trade from there. That's that's when you go to maybe fair value gap process, order block process. So I've done all those videos, but those are my mentorship course. If you guys want to learn, it's very simple. It's for you to pay $30 to learn that. So you will have take trade from here, take 3 hours, then you're out of the market before the market smash your SL. But if you are waiting for 5 hours and it's close to a trend line, you will have also hit SL. I think I took this trade and took SL, but I broke even before I broke take profit on before I didn't even share the I shared the signal this signal on my Telegram channel. I think so. I shared the signal on my Telegram channel. I think I shared that signal on my Telegram channel. Let me just look, just wait a little bit. Let me look for it. I think that was not the trade. Well, I have another setup like that I took, but I ended up maybe closing in 3 hours before the market hit stop loss. Just give me a few minutes. Let me check. What's wrong with my PC? I think it was this setup. This setup right. That's where I break even, then just close my trade in 3 hours. Okay, it was this trade. So it was not that setup. It was not the setup. But then again, I think I took this trade, but I think it was personal. I didn't share it on Telegram. Before it hit the stop loss, I already take my 3 hours, then be out of there. I think I took this trade. Yeah, I took this trade. But I think I didn't share it on my Telegram channel. So that was it. So if you don't understand anything, just let me know, please. I'm ending this live video. Or if you need any question, just ask me on WhatsApp because I'm using a free Zoom meeting. So they just give me 30 minutes or be 40 minutes. So we are just using our 40 minutes since.
Mm.
Do you have any question? Just let me know.